All right, welcome back. We got a special video for everybody. We're going to talk about the bond yields and some of the recent news that we've got coming out of the government and the spending bill that was looks like it's moving forward from last week. So bond yields are rising again, and here's why. So the bond yields are spiking. Now the bond market is just like any other market. There's buyers and sellers. And when people buy bonds, the interest rate goes down. When people don't buy bonds, the interest rate goes up. The interest rate goes up when people sell bonds or do not buy bonds to entice new bondholders to come in. So that's why we're seeing the yields rise, as people are saying, we don't want bonds at this current interest rate. If I'm going to lend you money, government, you need to pay me more interest because you look like a very suspicious borrower based on how much you are spending and accumulating debt. So the latest spending bill equals more debt and more borrowing. So there's no austerity in sight, and investors are demanding higher returns because they see the writing on the wall. The government continues to spend as they've always done, and people are getting upset with it. The bond market is getting upset. So let's break down why this is happening, what you can do about it. So government has no intention of cutting spending. They never have. They probably never will. It doesn't matter if it's red or blue, the spending never stops. So you'll hear me and people on Twitter use the phrase, nothing stops this train, because this is just a one-way runaway train, our debt. It's just going in one direction, and I have very low hopes that this will ever get fixed. The spending, we're always going to keep spending, and there's always going to be a large debt. That's nothing stops this train. So the debt has risen under every administration. It doesn't matter red or blue. The debt ceiling, it's just a joke. It's an imaginary line. They suspend it whenever it's inconvenient, and they just move this arbitrary line whenever they need to. So politicians, they talk a big game, but nothing changes. Let's go ahead and take a look at a couple of photos here. So this is not perfectly up to date, but you can see here the national debt just skyrocketing. And it doesn't matter if it's Republican, Democrat, red, or blue. And you see also in the black line here the debt ceiling. Just conveniently continue to raise it so we can keep spending. I mean, it's just unbelievable looking at this. So, again, you'll hear us say on Twitter, you'll hear me say it, nothing stops this train. This is a quote from the great show Breaking Bad. So the bond market is sniffing out that it's a giant Ponzi scheme. Now people know this. It just becomes more apparent every time a new bill like this goes through. People remember, like, man, this is a big Ponzi scheme. There is new debt that is issued to pay off the old debt. We have all this debt outstanding, and we're looking to borrow more money, to spend more money. So that is a textbook Ponzi scheme when you are issuing new debt to pay off the old debt. And the bond market knows it. So they're demanding higher yields if they want to keep playing this game. And it's not just the United States, it's across the world. It's all Ponzi schemes. All fiat currency is backed by nothing, and they just continue to print, and issue bonds and keep playing this Ponzi game. So the more we borrow, the more expensive it gets. So this is also where the snowball effect is starting to happen. With higher interest rates, when we borrow debt, we have to pay back at those interest rates. So we have to print more money to pay back at these higher rates. So it just continues to snowball and grow the longer that interest rates stay elevated, because now we have to pay back at much higher interest rates. So let's talk about the solution here. There are three ways out of this. The first solution here is to default on the debt. That'd be like you going bankrupt or not paying your credit card bill. It's not pretty. It's very ugly. Now, for the United States, this is very unlikely, but if it happens, bondholders get wrecked. Everyone's going to get wrecked. This is a terrible solution, and this should not happen. We pray that this does not happen, because it'll be very ugly for everything. Solution number two, and what we most likely will continue to do, is to print our way out of it. Inflate the debt away and destroy the value of the dollar. So $1 trillion today is not the same as $1 trillion 20 years from now. $1 in the 70s is a lot different than $1 today, and that's because Inflation is a silent killer and the value of the dollar goes down. So if you kick the can down the road, all of a sudden this $35 trillion debt won't seem like a lot 20 years from now. It'll continue to grow, but it won't seem as much as it does right now. So we can just print our way, keep kicking the can down the road, service the debt as we need to right now by the Ponzi, issuing new debt to pay the old debt and keep that going, keep raising the debt ceiling, and just keep devaluing the dollar. Now, this causes rampant inflation. Assets will inflate. Your dollar will be worth less. Goods will cost more. Services will cost more. You'll have to work harder for the same services because your purchasing power is going down. This is not good for the average Joe, but it gets us out of default. Now, number 3 here is to grow our way. Now, this is our best shot. Becoming more productive, generating more value. So if you had $10,000 in debt, but you only made $5,000 in income, the best way for you to get out of that, and it wouldn't be to take another credit card. It wouldn't be to print more money. It wouldn't be to default. It would be for you to increase your income from $5,000 to maybe $30,000. Then you'll have more income to service your debt. And then also you look more, you look like a better borrower. Your balance sheet is better. So growing is our best shot. Become more productive. We can't just cut back. We have to build forward. So growth is the only way out. The politicians won't save us. They're in the way. They're slowing our growth. We are the ones that create the growth. The growth comes from us, the builders, the creators, the workers, the business owners. We're the ones that create products and services that'll grow this economy and grow GDP over time. So it's not up to the politicians, it's up to us. Great products and services drive real wealth. If you think about it, the NFL is not great because of the commissioner. I use the commissioner as an analogy for the government. It's great because of the coaches and players, the businesses, the CEOs, the individuals, the employees. Those are the ones that run the show, really move things forward. It's not the commissioner, it's not the government. It's the people in the arena playing the game, moving things forward. And that's us, the people who show up, solve problems, and move the economy forward. So what does this mean for you? This long speech. This means that saving alone won't cut it anymore. You can't save your way to financial freedom. You can't save your way to get ahead because you're saving dollars that devalue over time. So you cannot save your way. The dollar is losing value faster than you can save them and faster than you can trade your time. Your time is a scarce asset. The dollar is not. They print dollars every day. And if you're consistently trading your time for dollars and saving those dollars, you're going to end up on the losing side over time. So you need to own real assets, real estate, stocks with pricing power and revenue growth, gold and Bitcoin. These will thrive no matter how we solve the debt crisis, other than default. I mean, if we default, people will probably go to some of these assets because at least you have a house. If the whole financial system blows up, at least you have a house. Now, stocks, I don't know. Gold and Bitcoin, I don't know. But if we print our way out of it, that's going to cause inflation. And these assets will go up because it'll take more dollars to buy this house. It'll take more dollars to buy gold. Your dollar will be worth less. So it'll take more dollars to buy these assets. So the value of the assets will increase. They will outpace the inflation. And if we grow our way out of it, there'll be more of a demand for these assets here, because there's going to be more money moving around. People are going to want to buy more gold. They're going to want to buy more houses. They're going to be higher revenue for your stocks. Your S&P 500 is going to go up because the revenue is going up. So that is what you need to do. The harsh truth: if we default, bonds crash. If we print, the dollar crashes. If we grow, builders win. So own productive assets or get left behind trading time for paper that's worthless every day. My final message: don't wait for politicians to fix this. They can't, they won't. You need to bet on yourself. You need to build, invest, and create value. That's how we grow our way out of this, and that's how you win the money game. So the most important economy is your personal economy. You should be focusing on that and not trying to predict Japanese economy, trade this, trade that. Focus on your economy and how you can be more productive and create more value for you and your family. So that's all I got. I hope this video helps. This has been a huge realization for me, and this is why I got involved in the stock market. I was tired of just trading my time for dollars, that every time I would get a paycheck, it wouldn't go as far as it did a year ago. And this is why I started to learn about money and markets. And ever since I did, I'm very thankful because I have a little bit more understanding. And that's when I started to separate myself and start to move forward. So get off the treadmill of this Ponzi scheme. So that's all I got for you guys. Like it, subscribe. I will talk to you all later. All right, peace out.